Been very pleased to see gas prices come down at least somewhat. Jay Young joins us. He's the author of The Upside of Oil and Gas Investing. Jay, thank you for coming on WBAP.
Hey, Ernie, thanks for having me on again. Good talking to you.
Why have we seen oil and gas prices come down?
Well, it's demand. I mean, demand is not as strong as it was a few months ago, and so what we're seeing is our supply that's coming in is coming in. Obviously, our demand's going down. We've seen the recession. People aren't driving as much as they were at one time, and the coronavirus in China. Just a few other things are happening right now. So we're seeing the demand, coming down, and our supply, taking over. A lot of public companies right now are recording record profits, and when you see things like that, they're starting to drill again. We're starting to it's a healthier, it's a healthier oil and gas markets. Before we lost, a lot of money in the markets with companies deploying capital and our demand going, way down, obviously during the pandemic. And this time it's a little bit healthier. I don't believe it's the answer yet. I don't think that we're overcome, and I don't think electric cars are, the answer yet. But I do think that what we're doing now is a little bit healthier, but I don't really see that this is going to be the answer to what, when Trump was in office and we had the drill baby drill and the $2 gasoline at the pump. I don't think we're going back there anytime soon. But it is going to be, it's not going to $6 or $7, so it is going to help the consumer when they do go to the pump. It's not the pain of the pump anymore as it once was a couple of months ago.
This is Jay Young. He's the author of The Upside of Oil and Gas Investing. We'll cover about $5 a gallon gasoline here, whether we're going to see something like that or 6 or 7 in some other parts of the country.
And Jay, what about the speculation that we are going to be paying $5, maybe 6 or 7, like Ernie was saying, in different parts of the country by Labor Day? Is that really something that we're heading towards, do you think?
Yeah, I do. I mean, I think we're going to go back to higher prices. And the reason why is because our supply. We just don't have the supply like we did before. We don't have that supply. And when we don't have it, with your governments and federal governments, state governments, state governments are just as bad in some states as the federal government, shutting down pipelines and permits and things of that nature. We do have, state governments that are pretty bad. But also, too, we're seeing record profits. Was it $50-something billion that companies made in the second quarter? And that, it's great that they're making money, but normally we would see the companies putting that money back in the ground. They're having 22 rigs drilling for oil and gas like Exxon, and Exxon is not increasing their rig count. They're keeping their rig count the same, and there's one company, Matador, they're going to increase it by 1 rig. And normally during this time when you see oil and gas profits at such an outstanding or astounding, rate, that they would deploy that capital by drilling more wells, putting a lot more rigs to.
Well, Jay, let me ask you something. Are they not doing that because the government is hostile to fossil fuels?
Yeah, it's that plus the ESG people. Like Exxon has a lot of people on their board, and that's what they do. They just say, hey, let's take the profits, put them back to the investors. They buy back stock. Exxon, the first quarter, they made $6 billion. They spent $10 billion buying back stock just because the people on their board say, we don't want to go to drilling, and we do want to, no to fossil fuels, yes to electric cars, and they just, they have these green people, not necessarily green people, but these green
we get
people.
It. Yes.
We kind of figured, yeah.
Yeah. That are just saying, we don't want to drill for oil and gas. We want to get away from fossil fuels. It's bad for the economy. It's bad for the air. It's bad for the, spills and things of that nature. And which is great, but we do use oil for a lot more than just. Well,
let me jump in. Jay Young is with us. He's the author of The Upside of Oil and Gas Investing. When you hear that companies are making massive amounts of money and they're not putting it back into product, people get angry and say it is the oil company's fault that prices are so high.
Right, it is, yeah. And they think it's just us, and they think we gouge and fix prices, which is further from the truth. I mean, it's all about supply and demand. You know, if we don't have the supply necessary when the demand goes up, and that's what I feel like. I think that demand is going to come back, and when it does come back, and people start, you know, driving again, and they're going to say, "Hey, this is a new normal. You know, we're going to drive. We're going to do the things necessary that we normally do, and we don't have that supply necessary to overcome our demand. Prices are going to come higher." What I do see is you know, I don't know if it's going to go to $5, $6. I don't think we're into that era anymore. But I do think it's great for investing in oil and gas. I think it's great for the economy. I believe that we're going to see, you know, oil prices go up and they're going to come down. But I do see it like $80 to $120. You know, I saw last night coming back from the Ranger game, you know, it was $3.66 at one gas station. It's great.
It's coming down. There's no doubt.
Yeah, it's good news that it's coming down. Jay Young is the author of The Upside of Oil and Gas Investing. Jay, thanks for coming on WBAP. We appreciate it.
Absolutely. Good talking to you.
All right.
Thank you.